Hi and welcome. If you've ever wondered whether you can tap into your solo 401k to buy an investment property, you are in the right place. This is one of the most exciting and misunderstood strategies in the retirement planning world. And today, we are going to break it all down for you. Go ahead and shoot over any questions you have during the live webinar, and we'll answer those questions as they come in. They don't have to be questions specific to today's topic, which is, can you buy an investment property with a solo 401k? Please also like our video, subscribe to our channel to receive notifications when we go live. We typically go live at least once a day. So solo 401k plans are not limited to Wall Street investments. That is stocks, bonds, and mutual funds. That's number one. With the right kind of solo 401k, you can use those funds to invest directly in real estate. Yes, I am talking about rental properties, commercial buildings, and even raw land. So here's what we will cover today. So in addition to fielding live questions regarding any aspect of solo 401k plans, traditional 401k plans, and even self-directed IRAs, we're going to delve deeper into, can you buy an investment property with a solo 401k plan? What types of real estate can you buy with a solo 401k plan? We talked about how you can invest in commercial real estate, residential real estate, even raw land or farmland. Those types of investments can all be held in a solo 401k plan, provided the company that you use to open the solo 401k plan provides a plan document that allows for investing in alternative investments, such as real estate. As far as what IRS regulations you need to know when investing in real estate through a solo 401k, specifically an investment property, some of those rules entail the following. One, making sure that you first qualify to open up a solo 401k plan, because a solo 401k plan is for the self-employed with no full-time W-2 employees in their business who work 1,000 hours or more in that business. So in short, if you own a business and it's just you and your spouse, then you would qualify for a solo 401k plan. However, if that business also employs a non-owner W-2 employee who works 1,000 hours or more, then you would not be able to open a solo 401k plan. Obviously, you have to be self-employed to qualify to open a solo 401k plan. Assuming you qualify, then you need to make sure you open a solo 401k plan with the right solo 401k plan provider, because not all solo 401k plans allow for investing in real estate. So typical solo 401k providers like Fidelity, Schwab, E-Trade, some of those fintech providers like Betterment, they do not allow for investing in real estate, physical real estate, like commercial real estate, residential, office buildings, and so forth. But you need to make sure that the solo 401k provider is a self-directed solo 401k provider. Such a company is My Solo 401k Financial. They offer a self-directed solo 401k plan that allows for not only investing in equities like stocks and index funds, but also physical real estate, as well as cryptocurrency, precious metals, private equity like real estate syndicates, and so forth. So again, make sure you open the self-directed solo 401k with the right provider whose plan allows for investing in real estate. Other rules to understand is that the solo 401k plan will invest in that investment property, meaning that title to that investment will be taken in the name of the solo 401k plan. For example, let's say your name is Thomas Jefferson. And let's say the name of your solo 401k is the TJ Retirement Trust. So title to that real estate investment property would be taken as Thomas Jefferson, comma, trustee of TJ Retirement Trust, which means that the purchase of that investment property is made with solo 401k funds. When that purchase is made, the funds from the self-directed solo 401k need to be wired to the title company for that purchase. And all the investment documents for the purchase documents for that investment property will be titled in the name of the self-directed solo 401k plan. So my example is Thomas Jefferson, comma, trustee of TJ Retirement Trust. That's how title to that investment property is taken, resulting in the self-directed solo 401k, which is also known as a retirement trust, owning that property. Therefore, because a solo 401k is a tax shelter vehicle, meaning it's afforded favorable tax treatment under the IRS regulations, all the gains from that investment. So if we're in the context of an investment property, the rental payments are going to flow back to that solo 401k plan, and it's going to remain tax sheltered. So it's not going to be subject to capital gain taxes. You can then reinvest those funds in other real estate or other types of investments. Similarly, when you sell that investment property down the road, the proceeds from the sale of that property will also flow back to the self-directed solo 401k plan, and then you can reinvest those funds. And when you sell that property, it will not trigger income taxes and it will not trigger capital gain taxes because those funds are flowing back to the solo 401k. So they will maintain their tax shelter status and they can then be reinvested. Other rules to understand are prohibited transactions. Prohibited transactions is a way of the IRS saying, hey, we're going to allow you to invest that solo 401k plan in real estate, including investment property. But of course, there's going to be some rules surrounding that. And again, we're talking about prohibited transaction regulations. What are those? Well, prohibited transaction rules were put in place to really create an arm's length transaction between the plan being the solo 401k, and the trustee of the solo 401k being yourself, the business owner. Which means that certain transactions in the context of real estate are not allowed. Transactions such as selling a property that you already own personally or through your business to your solo 401k plan. That's not allowed because you and your business are considered disqualified parties. Other examples of disqualified parties would be your spouse, your children, your parents. You cannot have your solo 401k plan purchase property that any of those parties own. Nor can you deposit property that you own personally or through your business to the solo 401k plan. That's also prohibited. And then again, you cannot sell property you own already to your solo 401k, even if it's done at fair market value. That's prohibited. Other prohibited transactions entail doing work on the property. You cannot pick up a hammer and start performing work on that property, that investment property. That type of sweat equity work has to be performed by non-disqualified parties. So they cannot be performed by your kids, your parents, your spouse. You would have to have contractors do that work and pay those contractors with funds from the work to make those improvements to the property. You also are not allowed to use that investment property for personal use, even if you pay fair market rent, nor can you use it for even a day out of the year. Now, you can manage that property as long as you do not get compensated for doing so. Managerial functions include looking for tenants, hiring contractors, and so forth. So those are regulations to be aware of. Looks like I've got a question here. Let's take a look at this question here. Let's see what it says. I'd like to build a rental cabin in the mountains. It would be an Airbnb for 30-day periods. I imagine I could fund the construction from the solo 401k, but the problem I have is that I have owned the property it would be built on since 2021. Is there a way to handle that? In short, no, you will not be able to process such a transaction because, for a number of factors. Number one, you own the land personally, so you cannot improve real estate, in this case, land. You cannot use your solo 401k plan to improve land that you already own. So, no, you would not be able to have your solo 401k handle the expenses for that new construction. That's prohibited. Nor can you turn around and sell that land to your neighbor and then have your solo 401k purchase the land, or then have the solo 401k improve that land. That's a roundabout transaction. That's also disallowed. In short, you cannot do indirectly what you can't do directly. Also, when it comes to short-term rentals, when you utilize the solo 401k to invest in an investment property that's going to be used for an Airbnb, it's not as advantageous because it's going to trigger unrelated business income tax. That's known as a business transaction, business activity. It's got to be a long-term rental where you rent it to somebody who's going to be staying in that property for longer than 30 days. We have information on our website regarding the types of investment property a solo 401k can invest in. Specifically, it's got to be long-term investment property where you're going to have a tenant that's going to be staying in there, not just on a monthly basis, but on a long-term basis, typically a year or more. So no short-term rentals is not a good idea for short-term rentals because it's going to trigger unrelated business income tax, because that's going to be known as a business activity. Good question. Okay, looks like we don't have any other questions for now. Let's keep on discussing today's topic, which is, can you buy an investment property with the solo 401k? Let me see if I can share some information about short-term rentals here. Give me a moment here. Let me see if I can dig up some information about Airbnb to share with you. Here we go. I'm going to share this link. So take a look at that link here regarding investing in Airbnb properties through your solo 401k. All right, so I don't see any other questions for now. Let's keep discussing today's topic. So we talked about the process, the regulations to understand, the prohibited transaction rules, Now let's talk about a custodian-based self-directed solo 401k versus a self-directed solo 401k with checkbook control. So you typically want to open one up with a company like my Solo 401k Financial, who provides a self-directed solo 401k with checkbook control. Checkbook control means that you are the trustee of the plan, number one. Second, that you can invest in real estate. Third, it means that you get to choose where to hold the funds for that self-directed solo 401k. They can be held at your local bank or credit union. They can even be held in a brokerage account with checkbook control at Fidelity and Schwab, for example. They provide brokerage accounts for self-directed solo 401k plans with checkbook control offered by a company like my Solo 401k Financial. With the checkbook control self-directed solo 401k, it's also less expensive because you as the trustee will place those investments by wire or by writing a check, so you don't have to pay holding fees. The purchase documents, as the trustee of the plan, you safe keep those investment documents, so they're recorded deed. You hold on to those as the trustee of the plan. If you utilize a custodian like a self-directed solo 401k custodian, they're going to nickel and dime you. They're going to charge you transaction fees, holding fees, and you'll really see those fees add up when you start making multiple investment property investments, or when you have to pay a property tax bill. Those have to be paid with solo 401k funds. If you have a checkbook, you can just write a check for that for that property tax payment. Whereas if you have a custodian, if self-directed solo 401k with a custodian, they're going to charge you a transaction fee just to send those funds out to the property tax collector. Other expenses that have to be paid with those solo 401k funds that I touched on earlier are costs for improving the property. If you have a checkbook, you can write a check for that. Whereas if you utilize a self-directed solo 401k custodian, they're going to charge you a transaction fee just to send monies out, just to send that money out to that contractor. Well, if you have a checkbook solo 401k, you simply write a check and pay the contractor. So with this checkbook solo 401k, there are no transaction fees. So that's a big distinction, or holding fees. And also with the self-directed solo 401k custodian, they're going to be reviewing the paperwork before they'll send the funds out for that investment, which could slow down the purchase of that investment property. With the checkbook solo 401k, as the trustee, you simply write a check or have those funds wired out, purchase. So those are items to be aware of when investing in a solo 401k and investment property. All right, looks like we don't have any other questions today. We appreciate you joining today's daily webinar. We'll be back live again tomorrow. Until then, have a good rest of the day.